What's going on, everybody? Welcome back to the channel. Today I'm going to be talking about how this channel is going to be transitioning into a swing trading channel rather than a day trading channel. I have recently got a full-time job and I'm going to be going back to work full-time, so there will be no longer the ability for me to day trade. Plus, day trading really hasn't been that successful for me. I've been able to get some really good strategies down, but overall trading with a small account is just really difficult, and after fees and commissions, even if I'm breaking even, I'm still losing quite a bit, especially over like 6 months to a year. They just commissions and everything stacks up. So I'm just going to transition more into swing trading. Plus, with a full-time job, it's just day trading is just no longer an option. So we'll see how it goes, but I'm also probably going to be looking to trade options as well. So and I'm going to probably be making more videos like my stock pick of the week, where I just dig into one stock and I break down the individual stock and what I like about it, the fundamentals, and talk a little bit about the technicals. So these videos that I'm going to do with the stock picks for swing trades is going to be a little bit more quick. It's going to be just, these are the stocks, these are the reasons I'm kind of looking at them, or these are the articles that I'm highlighting that talk about them. There's a few websites that I like to look at when I'm thinking about swing trades. One of them specifically is TipRanks, and I'm going to be going over that one right now. So let's jump into that. So there's several different websites that offer like analysts that break down stocks and that give you their buy recommendations, their sell recommendations, their hold, or whatever they want you to do, or whatever they think is best. I like TipRanks as probably one of the better websites. TipRanks.com is just superior because it has a collection of analysts from everywhere, and it kind of gives you a really good overall picture, consensus, rather than just this side or that side. It's a really good overall picture of what all the analysts are saying, and a lot of times there's not necessarily this same analysis, so you can get kind of differing opinions, and sometimes some people are selling, some people want you to buy, but for the most part I will give you ones that are strong buys. So it's pretty much everybody, all the analysts are saying buy, and there's reasons why, and I'll go over that. So the first one we're going to look at here is these are all going to be penny stocks, by the way, so trade them at your own risk. They're very risky, very volatile, and this is why we want to be aware that do not trade money that you are not willing to lose, and also be aware of the risks when trading penny stocks. These are very volatile and you can lose everything. So with that said, and this is obviously not trading advice, the first one we're getting into, this is just my opinion, but the first penny stock that could be a possible buy is SNCR. And according to this article, it is a strong buy with massive potential upside. So SNCR, Synchronoss Technologies. So this one is a small cap e-commerce company whose main products, software and cloud network synchronization platforms, allow online vendors to connect and sync their communications, activations, backups, and customer contacts across service providers and devices. The system allows for greater coordination, lower costs, and streamlined networking. According to Synchronoss, the company's vendor customers can find new revenue, improve their own site visitor engagement, and improve the overall buying experience, all leading toward more business. The company reported signing 2 important new contracts in Southeast Asia during the first quarter, including one with the Indonesian data center company Telco Sigma. This contract will deliver Synchronoss product to 25 universities for use by prof, students, and school groups. Synchronoss also renewed its messaging contract with Telecom Italia Mobile and added security functions to the services. So it also continues its massive partnership with AT&T, and they used their personal cloud services, and they have an arrangement that's working well for both companies. So in its financial report for Q1, the company posted revenues of $65 million, slightly above the estimates, and the EBITDA of $5.5 million, well exceeded analyst predictions. So they're showing really good revenue growth, and the company is also raising its guidance to 32 to 37 million for its EBITDA. So that's a really good growth, showing that the company is expecting huge growth in the upcoming quarters, and this is why this company is getting hit with huge kind of upside potential. So I don't have a position in this company yet, and they say here, as it was trading at 244, that was earlier this week. So we'll look at where the stock is trading now. But for overall, understand that this is a tech company. They are transitioning to, or I should say, they are acquiring customers in Southeast Asia as well as Europe, and they also have customers in North America, with AT&T being one of their largest customers, and integrating their cloud-based platform services. This valuation by the 5-star analyst Michael Walkley describes how we view the valuation as a compelling opportunity as management executes on its turnaround plans, implements additional cost savings, announces new customer wins, and increases its recurring revenue mix. In the event management continues to execute, margins expand consistent with our 2021-22 estimates, we believe the multiple cloud expand closer to peer multiples at 3 times EV revenue. So basically meaning they're going to be growing 3 times what the estimates are for their revenue growth. Even if the multiple only expands 2 times to their 22 estimate and reaches our $8 price target, this would generate meaningful upside to the current share price, with several cloud deals anticipated to contribute to growth in 2021 and beyond. Sustained growth potential at Verizon, which renewed its white label personal cloud platform for 5 years, and strong annual RCH revenue contributions anticipated for U.S. carriers and Japanese deals. We believe there are several strong building blocks to support our estimates. In line with his upbeat outlook, Walkley rates SNCR a buy, and his $8 price target implies a robust 230% upside in a 1-year time frame. So let's check out the share price right now. So SNCR, as you can see here, Synchronoss today up about 9%, and you can just see that still, we're looking at potential upside. As he was talking about it, it was way back here at 244. So it's already shot up almost $1 a share. Well, over $1 a share, I should say. But with the potential upside, like he was showing, to $8 to $10, there's still a lot of room for upside potential on SNCR. Obviously, if you look at the overall time frame, you can see that was pretty much the low, and that 244 was a really good entry price because 235 acted as the low there, and it's pretty much been the all-time low, other than the 217 that you had back then. So anywhere below 250 is probably a screaming buy, whereas up in this range here now, you're a little overextended at the current price level, just in terms of like the short-term price. So I would expect SNCR to come back down in towards the $3 range. So if we can get this thing back into the 282, so you can see these, it's above the channel here, and if it comes back into the channel, back into these moving averages, then we could see it kind of tap these moving averages, and probably in the 280 to 290 range you want to be buying. And then this thing, like I said, will have that upside towards $8. Or if you want to be aggressive, you could just buy it now and hold for that upside, as long as you're understanding that this is months out. This is not weeks. This is months from now that you will probably see that potential upside. Now, it could be weeks, could be tomorrow. I don't know. But what I do know is that right now it looks overextended, and because of that, we want to be aware of that. So we want to be not buying it when it's overextended, wait for the pullback, get in on the pullback, and then we hold for the bigger move. So that's SNCR, and you can see the overall estimates are that we have about $7 upside to $9. So between $7 and $9 is your estimates. The conservative estimate is $7.73, which is still which is still about 150% upside right now, right? Not even actually. If it's 3 something, it's basically only it's only about 100% upside, 120% upside right now. But this is, like I said, if you bought it at the current price, I would wait for a dip, wait for it to go back down to $3, and then you're looking at little more than 120% upside, right? So the second stock we're going to talk about here is CFRX. And this is a stock that I actually already have a position in. So I recently, just today, actually acquired a position in Contrafect. And the reason is quite simple. It's close to its support level and it has potential upside. So I'm looking to be more aggressive on this one, mainly because it has very good upside, and these catalysts are something that is very rare. It's something that it's unique to this company, and because of the fact that they're focusing on kind of this underserved area, which is creating drug-resistant infectious medicines that help to reduce the impact of drug-resistant infections in hospitals. It's kind of complicated, but basically they help these infections in hospitals that are resistant to drugs. So they focus on giving medications that help with the anti-infective technologies to allow for patients to be able to and hospitals to be able to have a better success rate when dealing with infections and drug-resistant infections. In the U.S. alone, resistant infection causes 2 million illnesses annually, and globally is responsible for over 700,000 deaths. By 2050, resistant infections may cost the healthcare economy upwards of 100 trillion accumulated damages. So this comes from many different things. Obviously, like if somebody dies and you sue the hospital because of and you get paid out from damages, the hospital is liable to that. So that's one of the things it's talking about in damages. It's also, people obviously. It costs money to have people in hospitals, so they're losing all kinds of money, and trying to help people that ultimately die is costing them, upwards of $100 trillion, or will be costing them upwards of $100 trillion by 2050. If we can reduce that, then that will not only save that money, but it will also save lives. So this is the thing, what Contrafect is working towards. And that's why the company is trying to develop its direct lytic agents that aid in the treatment of lethal resistant infectious agents. Two of the main targets of Contrafect's pipeline are methicillin resistant Staph aureus and gram-negative pathogens like multi-drug resistant MDR, whatever the hell that says. I don't really know, to be honest with you, the whole scientific explanations or what these actually do, but I understand what their focus is and what their main who their main target is. So who their target audience is, who's going to benefit from these drugs, and the fact that they are very, very likely to succeed in these trials. So they are focusing right now on their early testing for their drug Exebicas or Zebacas has shown potent antibacterial activity, killing the targeted bacterial cells. Exebicas is now undergoing the phase 3 Disrupt study, a clinical trial with patients enrolled in 2-to-1 ratio of Exebicas versus placebo. Interim data is expected in 2H21. On a positive note, the U.S. government's Biomedical Advanced Research and Development Authority, or BARDA, has awarded a contract to Contrafect for development of Exebicas worth up to $86.8 million. So almost $100 million to develop this drug. So it just shows that the government is interested in this drug, and they're very, very supportive of this company trying to develop this drug. So that just shows that there's lots of people looking at this drug, and this award that they also got, or this grant that they got, also shows that they're, this basically gives them over $100 million in funding, just free funding to help get this drug on the streets. So that's coming from the government, and it's also coming from this combating anti-resistant bacterial biopharmaceutical accelerator. I don't know what that is. So I'm assuming that's like a government program or something, or it's a non-government organization. But either way, they were able to get funding through this program as well, upwards of $18.9 million. So with all that said, this analyst, Vamil Divan, gives it a big bullish stance and basically says that if their phase 3 data from this trial, from the Disrupt trial for Exepicus can be successful, then, and he thinks it's 70% probability of success, then they're going to see huge growth in 2021 and going into 2022. So this is one of the reasons why they're giving this a upside of 150%, and right now the stock's trading at about $4, and they look at this as a potential $10 play. So the lowest estimates are about $6.50, and the highest estimates average price target is about $14. So with the average being $10.17, right? So it's obviously a very wide range, from $6.50 being the low to $14 being the high. But with, you know, even the average, you're still looking at about 150% upside. If you can get 14, then that's, you know, even more to the upside, right? Then that's basically 100 and what? No, it's over 200%. So if you can get 14, no, sorry. 4, 8, 12, yeah, it's 200%. Yeah, it's basically 250%. If you can get 14, you're up 250% from $4. So this is the stock that I have recently taken a trade on. So as I was saying, I was looking to get in on a swing trade, and I chose to get in on CFRX. So that's where I'm in on my swing trade today. I got in at 435. I was willing to just basically get in on the ask or on the bid, whatever you want to say. So I was in at 435, and I'm looking to hold this thing until we potentially get a move up to 650, in which I might sell some. But I probably am going to hold to $10, and I'm able to hold this thing for the next 6 to 12 months. So this is not a trade that I see succeeding in the next week or two, right? This is a 3 to 4 month play, 5 month play, 6 month play. So understand that if you're going to be investing in something like CFRX, that this is not a quick play for today or tomorrow. This is down the road, looking at 3 to 4 months from now, 5 months from now. This thing I see going up to $6, $7 easily, and then hopefully to 10 within the next year, right? So that's CFRX. That's pretty much the only one that I have a position on, but I do see their Exepicus drug as being a good catalyst for a nice rally. And the next two stocks I'm going to be talking about are these are a little older. Like this report came out a few weeks ago, so this is not necessarily new, but these stocks still have a lot of potential, and they really haven't done anything. But I still want to just let you guys know that this article did come out, like, you know, a couple weeks ago, so just be aware of that. Some of the stuff may have changed. You might want to check tip ranks again just to make sure that it's all kind of the same. But either way, so the first stock we're going to talk about here is Aptinex. So they are a company in the biopharma industry, and they work on the treatment for brain and nervous system disorders, developing new synthetic small molecule medications for commercialization. The company has a proprietary NMDA receptor modular discovery platform, which enables a novel approach to the targeted disorders. Their research pipeline currently has 3 compounds in the clinical stages, all in phase 2 trials. So they have a potential treatment for Parkinson's disease and low body dementia, 2 serious central nervous conditions of aging. Preclinical study shows robust activity in rodent modules and favorable safety tolerance in human patients. So this is, like I said, a biopharma company. They're not really, these are a lot of trial stage, so a lot of this is things that could happen. There's a lot of things that they have to do right in order for them to be successful, but if they can hit on all of their different trial runs and get everything to phase 3 and then be successful, And as he says here, the stock has been trending lower during the past summer months due to the lack of near-term catalysts, but we believe that investors will start to get much more focused on the name moving into 2021 ahead of the multiple data points in 2022. We continue to have a positive view at Aptinyx's focus on NMDA receptor modules and its pipeline opportunities. Aptinyx is a strong drug discovery platform plus a library of 1,000 identified compounds, which should enable continued pipeline expansion and sustain long-term growth. So with that, the analyst Goodman rates APTX with an outperform buy rating and gives it a $12 price target, which is substantially higher than it is right now. It's trading in the $3 to $4 range right now. So APTX is an interesting play. As you see, it's basically at about $3 right now. So with the upside to 1050 is an interesting upside. The lowest here is $8. So even to the low, you're still looking at a potential 200-300% upside. So that's pretty substantial, right? So you probably want to still keep APTX on your radar. Like I said, this is one of those things where it is still quite far out. It is not a catalyst that's going to come through tomorrow, but over the next 6 months, if you can hold this thing and look for the potential upside, then I see it as being a good buy. Even at this level, anywhere in the $2 range is probably a good level, knowing that, you know, if it breaks back below 250 with any serious conviction, you might want to get out. But I still see it being good to buy anywhere if it dips down to this 250 level and hold for that potential upside to $10 or even $8. Because with something like this, there's a lot of speculation and it's hard to know what the potential upside will be and what will happen if it gets, breaks towards 6, 7, 8. It could do it for a day, but I wouldn't expect it to sustain those levels if it does it in the next few months. But if it does it a slow, steady grind for the next 6 months to 10 months, and the next thing you know, it's trading at 10, or $8, $9 in 6 months, then it could easily go up to 10, 12, and then probably come back down. But then if you're getting in anywhere in these levels, you're happy with that potential upside. You're ecstatic, right? So APTX has really, really big upside. It's just you want to be aware that this is still quite a ways out before having some serious catalysts. Like he says, no serious catalyst really until 2022, but that still gives us some time to kind of wait and see what happens. But getting in at these levels is not the worst idea. The next penny stock we're looking at is Exela. It's another biotech company. Exela is using indigenous metabolic whatever as a jump off to approach new treatments for complex diseases, including non-alcoholic steatohepatitis. Basically, they're trying to help with serious liver conditions through producing these steatohepatitis or whatever, and they're metabolic modulators. So these are helping fight these different alcohol. I don't know if it's obviously like liver disease conditions, serious liver problems probably come from alcohol. So I don't know if these are directly fighting against alcohol related illnesses or if these are just specifically for liver. But either way, they're looking to help with people with serious liver conditions, and they are looking to complete their early clinical stages and their phase 2 trials. The drug candidate under development to treat NASH started the MPACT phase 2B clinical trial in May of this year. The study will enroll a total of 270 patients and will satisfy them by the presence or absence of type 2 diabetes and an important clinical complicating factor. I think it's supposed to say and, not and. That would make more sense. An important complicating factor. So also in May, Exela announced positive clinical data on AXA 1665, the drug being studied as a treatment for OHE. The data showed that 2 different drug doses proved safe and well tolerated and showed positive results when compared to placebo. Both AXA 1665 and AXA 1125 have had their IND application cleared by the FDA. So that's good that they're showing substantial upside to these different drugs and that they are being both cleared by the FDA. Good signs. And Chardon's analyst Ki Naka we view Excella's leading asset AXA 1665 is likely to exceed the benefits provided by the current standard of care therapies, lactulose and rifaximin in HE, due to its clean safety tolerability profile and ability to target more aspects of HE than simply blocking ammonia absorption in the gut. So ammonium, I guess. I don't know. Ammonia. Beyond AXA 1665, we also anticipate success for AXA 1125 in NASH. The NASH market is crowded with potential therapeutics, but is also a very large commercial opportunity that we anticipate will allow for the success of multiple market entrants. We expect AXA 1125 to thrive as a base level therapy due to its impressive safety tolerability profile as a result of its mechanisms of action, with potential to move forward in pediatric NASH sooner than competitors due to this safety profile. The 5-star analyst noted. In line with its optimistic approach, Nikkei gives AXLA shares a buy rating, and his $10 price target suggests 186% upside. So we can see AXLA, the average estimate is $11.25. Low estimate would be $10. So even his estimated price target, this Nikkei, is $10, is really low. The average is actually $11.25, and the high side is actually $14. So with AXLA, kind of like APTX, you have quite a big upside to $14. So we'll look at the overall chart, the daily chart first. You can see clear support all the way back in this 250. So when it broke down here, that was a bit of an aberration, and you can see it immediately comes back up. So you have support here and this kind of $2.50 or $4 here. So you have a lot of support in $4, but when it broke there, your next support would be obviously $3, and you have a lot of support anywhere in the $2 range. So if this thing goes back down into $2, I see it as a screaming buy. But even in the $4 range, if it can hold this range and maybe you get like a 380 or a 375 buy, I think you can have really good upside to 14. And with the potential that this thing rips, like you have these days like this here, right, where it just basically gives you 10% and then it just sells right off. So that's the problem with stuff like this, is there's such low float and there's such early stage that because the potential is 6 to 12 months, you have to be aware of that, and you have to be aware that there can be big swings to the up or down side before then until we get some really, really big catalysts. But if you wait for those catalysts, you're probably going to miss the move. So sometimes you have to kind of just look for a level, be comfortable with that level, and get in. So, yeah. That's what I think for that. And the last one I want to talk about here is actually a gold stock. So Yamana Gold is a company, or is a stock, that I think should be looked at a little more. And because gold is not getting kind of the big hype that it normally gets, you're kind of seeing this lack in focus, or this lack in any sort of care towards gold. So gold is kind of getting neglected, and that's why you have stocks like Yamana Gold that has a lot of potential upside and a ton of I don't know what it says, but it has a ton of upside to it, mainly because it has some really good gold deposits in Canada, and it's expanding into a lot of its into the different gold deposits it has. It's showed consistent production, and they could be producing upwards of 100 ounces of gold every quarter or every month. I'm not sure but either way, that's a lot of gold, or 100,000 ounces. I don't know what but anyway, they're just going to be producing a crap load of gold over the next few months, 2 years, and you're going to be seeing a serious um hmm interesting. So it actually, I didn't know you could actually look at, and they would actually show you their position. So it actually tells you their positions, which is very interesting. Um, but you can see here that some people are reducing their positions, not, at 433. They didn't not liking kind of what they're seeing. Other people are looking to reduce their position, but that was over a month ago. So the four latest trades are all buys with one reduce. So for the most part, they're still all holding. There's nothing to be concerned about there. The biggest thing with this stock is that it's gold, right? So with gold, it's really about the overall market. And if people continuously go, shy away from gold and kind of stay comfortable with the markets, then gold's not going to have a big rip. But even with stocks like Yamana here, they have so much potential upside that doesn't really matter what happens with gold, as long as you're willing to understand that it can't go a ton lower than where it is. So being able to get in around these levels gives you kind of a potential for that upside move with very limited downside. Now, when I say that, obviously there's always downside. So don't think that this thing can't go down to $1, because it can, right? Because it can. It went down to almost 230 here, right? That was back in 2020. But what you got to realize is that after that, the biggest dip it had was to $3.99, right? And ever since then, it's been holding $4. And right now, it's right at that level. So if you're going to be getting into Yamana, you have to be aware that gold could have a run in the foreseeable future, but that will indicate probably a crash in the market, or at least a kind of sideways consolidation in the market and not much of a higher move, and people start kind of getting nervous and they start getting more into gold. Or if gold just starts to get this big momentum and people start realizing that it's oversold and that it's kind of hitting these support levels and it's kind of just been selling off for the past few months, so that we should have this potential big rip and big kind of sentiment for a big run in gold after the big sell-off we've had for the past couple of months to over almost a year now, right? Basically since the summer of last year, gold has been selling off. So if that continues to happen, obviously Yamana is going to keep selling off. And if that support level of 4 breaks, then I would be getting out. But if you get in around $4 or $4.10, $4.15, and it breaks to $4, then you get out. It's not a huge loss, right? But if you hold it and it goes back up to $6, like the analysts are predicting, then you're gonna have a huge upside. Basically 50% upside for less than 2% downside, right? So that's the way I think about it anyway. So because of the fact that you have that huge upside, even the low estimate is $4.75, right? So even if you buy at $4 and you sell at $5 or $4.75, you're still getting 10-20%, right? So that's the way you got to look at it. And I think that with all these stocks that I'm talking about, obviously they are long term, and when you look at long-term plays, you have to be willing to understand the overall market and how certain commodities trade. So gold obviously trades counter to the markets. When the markets are going up, gold is usually going down. When the markets are going down, gold is usually going up as a hedge. People hedge their money and put it into gold as a safe place. But the reality is that gold always has value. Gold is one of the most widely traded metals in the world. It's one of the most valuable precious metals in the world, and it will always have value. It has value in so many different ways, from jewelry to microchips to various different forms of plating and cosmetics and architecture. It's just such a versatile metal that it is so necessary for human beings, or well, I shouldn't say for human beings, but for civilization and society, that it is never going to just go away. So when you have these big sell-offs, it's kind of like with oil. Like I see oil maybe going away in 10 years, but not in the next 2. So when oil's dipping, it's like I see it as an opportunity to buy. That way I'll sell it in a year or 2 when I really think EV is going to start to take over, or when we're really going to see the end of, if we're ever going to see the end of oil. You want to kind of, but you still want to be buying it when people are panic selling it, thinking that, you know, it's going to be going away tomorrow, when we can clearly see that it's not. And I think gold is the same. So that's my idea. That's my thoughts. That's my recap for this video. And thanks for watching, guys. Hopefully you guys can follow me on this journey as we switch to transitioning into more swing trading than actively day trading. So I'll be trying to give you guys weekly recaps and weekly updates on my swing trades or on my options plays, and looking at kind of where I'm looking to trade and why I'm looking to trade certain stocks. I'm not only going to go long, I'm also going to look to swing trade short. So I'll keep you updated on that. But for right now, thanks for watching, guys. Feel free to like and subscribe. Let me know what you guys think. If you guys any stocks that you guys want me to look at, I will feel free to, you know, leave them in the comments below, and I will look at them, give you my thoughts. And obviously this is just my opinion. It's not trading advice, but either way, thanks for watching, guys. As always, please like and subscribe. And I love you guys for giving me support and for watching these videos. It's hard for me sometimes when I don't get a ton of views for me to keep doing them, but I try to do it no matter what, for myself and for you guys, because I know that there are people that do learn from these videos. And if you did watch it all the way to the end here, please let me know. Give me a thumbs up. And, you know, you're my biggest love, my biggest support, my biggest fan. My biggest fan made it all the way to the end. I love you. I truly do. And I couldn't do this without you. So just let you know that. Thank you. All right. Have a good one.